You have got 5 lakhs to invest. Should you lock it in for 5 years with guaranteed returns through NSC, or should you take a calculated risk with mutual funds for a shot at higher growth? Let's break it down in this video in a simple, clear manner and backed by numbers. Hi, welcome to holisticinvestment.in, where we simplify the world of personal finance for individual investors like you. So what is NSC? The National Savings Certificate, NSC, is a government-backed savings scheme offered by post offices. So here's what you get. First, fixed return of 7.7% per annum compounded annually. Next, 5-year lock-in period, interest paid at maturity, and minimum investment of 1000 rupees with no upper limit, and it is safe and secure and risk-free. But the catch is there is no yearly withdrawal except in rare emergencies, and the returns are fully taxable under income from other sources, and your money is locked. There is no liquidity or flexibility. But what about mutual funds? Now let's talk about it, especially the lump sum investing in mutual funds. So here's what makes them powerful. First, you have market link returns, 12 to 15% historically for equity funds, and there is no fixed lock-in period except for ELSS fund, that too very a short-term period, and there is a long-term compounding potential and tax efficiency because LTCG is taxed only after 1 lakh of annual gains. But yes, mutual funds comes with market risk, fluctuating returns, and the need for proper fund selection. Now let us quickly compare your 5 lakh investment over 5 years in NSC and mutual funds. So first of all, in NSC the interest rate is 7.7%, which is compounded, and if the value of your 5 lakhs after 5 years would be 7.27 lakhs, and it is fully taxable. The final amount you will get in your hands is 6.85 lakhs, which is post-tax approximately. But if you calculate your 5 lakh investment in mutual fund at the rate of 12%, first of all, the interest rate is market linked, and the value of your 5 lakh after 5 years would be 8.81 lakhs. First of all, what will apply here is LTCG. So it is 10% over 1 lakh gains. So final amount you would have in your hand would be 8.63 lakhs. And if you calculate the same investment in mutual funds at a rate of 15%, so this is also market linked interest rate, the value of your 5 lakh after 5 years would be 10.05 lakhs. So the tax here also same, the LTCG tax applies 10% over 1 lakh annual gains. So the final amount would be 9.80 lakhs. So the result is mutual funds beat NSC by a wide margin even after tax. So which one's right for you? You can choose NSC if you are a conservative investor and you're looking for guaranteed returns and you're okay with locking your funds for 5 years but you're not comfortable with market volatility. And you can choose mutual funds if you're investing for long-term wealth creation and you're comfortable with calculated risk and you want flexibility and liquidity of your investment and you're looking to beat inflation over time. So how to make the right choice for you? There is no one size fits all investment, only the right fit for your goals and comfort level. You want capital protection with a steady growth, then NSC might be your go-to, especially if you're nearing retirement or saving for a short-term low-risk goal. But if you're looking for long-term wealth creation, then equity and hybrid mutual funds can offer better returns provided you can stay invested and ride out market volatility. Still not sure what suits you best? Then a professional like a certified financial planner can help you because they can help identify your goals and time horizon and assess your risk profile and help you allocate your lump sum across the right mix of mutual funds and optimize for tax efficiency and returns. So what is the final takeaway from this video? Your 5 lakhs doesn't just need to grow, it needs to grow smart, and the smartest way to do that, investing with clarity and confidence. So whether you choose the safety of NSC or the potential of mutual funds, make sure your choice is backed by a solid plan. Do you want a personalized plan for a lump sum investment? Then click the link in the description to book a free consultation with one of our certified financial planner. And hey, if this helped clear your confusion, then like, share and subscribe for more real talk money videos that actually make sense. Let your money do more and let your future thank you. I will see you in the next video with much more interesting financial insights like this. So thank you for watching.
Definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.